Welcome to the April 22nd, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, NetWorthRadio.com, and your financial weatherman with the charts and graphs that go with financial lessons and a read on the global financial markets. We're going to start this week with a tour of how investors have actually done in different choices over the long term and how the average investor has done over the long term. And the answers are going to surprise you, but they have a lesson, and having done this for 33 years, I can actually give you insights into why the average investor has underperformed some of the obvious choices. And let's look at the major asset classes. 15-year performance, real estate investment trusts top the list of the major asset classes at 8.5%. Now we go emerging market equity. This has two bear market cycles, 08, and of course 18 was the quickest bear market cycle since 1987. There's a 20% drop in the indexes. Obviously, things have recovered some since. Emerging market equity ranks number 2 at 8.3% average. Big stocks in the U.S., 7.8%. Small stocks, 7.5%. Surprising here, fixed income high yield, 7.3% over the 15 years. Actually competitive with equity and more reliable by many measures. Here we go. We look at fixed income, about a 4% average annual return for the average fixed income allocation. The average advisor punches in a fixed income strategy that's done 4 instead of say 7 or better, and cash was 1.3, commodities minus 2.5%. Somebody says, do you have a commodity strategy? Well, this weekend's program actually has a better commodity strategy by my measure, and it could give you not just great income, but appreciation with something tied to inflation besides gold, which we covered last week. A miserable decades-long performance for gold at times. We're not sure how that'll turn out, but we have better choices. That's what Net Worth Radio is about. Okay, we're looking at household net worth. How's the USA actually doing? Well, God bless America. On Easter weekend, $69 trillion was the household net worth back at the end of 2007 before the crisis. Now we look, it's $109 trillion net worth. Have we borrowed ourselves into a frenzy? Well, some of the headlines might say that, but it's not true. Total liabilities, about $16 trillion. That's about where it was back here. But notice the net worth is up $40 trillion. Congratulations, America. That says that you probably shouldn't worry too much about 21, 22 trillion in debt by the federal government. It's an issue, but we're sitting on financial assets of about $44 trillion. Pension funds, well, they're about $23 trillion. Big part of that, $60 to $70 trillion would land in treasuries if the yields were higher, which they're not. And homes make up about 27 trillion, 26 trillion of the 120 trillion net worth. And congratulations, America, we have a new high in net worth. How has the average investor done over the long term? You can see on a 20-year basis, real estate investment trusts are closer to 10%. The broad stock market about 5.6%, because 20 years includes the tech wreck of '02. Now we come back to bonds, about 4.5% over that period. Homes, your house has gone up probably 3.4%. Inflation ran 2.2. Whoa, what's this? Average investor made less than 2%. 1.9% over the 20 years, according to Dalbar. They watch how mutual funds actually do and how the basket of everybody in those funds does. It's a good measure because it also says what bad behavior caused the average investor to get 1.9. Wow. And the yields during this period Plenty of good yields available, reliable above 7%. How do we fix that? That's what NetWorthRadio.com is about, and McGowan Group. I urge you to go to NetWorthRadio.com, fill out your preliminary client questionnaire, come down to the Crescent. We'll give you a full tour. The YouTube studio is right here in the office, by the way. And you'll leave with a brainstorming investment plan outline. And we'll give you choices that we believe are the best going forward. But you'll also have an email recap and a team that cares on your side. Make the difference right now at networthradio.com. All right, just for fun, federal finances, yeah, it's not so good. $900 trillion in borrowing, a near record debt projected for 2019. And they've got a category over there of spending of $4.4 trillion, about almost $500 billion, a half a trillion. It's just listed as other. So anyway, if they cut the other out, well, it looks like defense and Social Security and Medicare would still be okay. Anyway, federal net debt, yes, we've got the graph right here versus GDP. But one of the things, and we posted this on the website, thank you JP Morgan Asset Management here. If we look at the budget deficit, it's not rising like it skyrocketed back in the crisis, but in this case, it's still a long-term concern. All right, retail ice age. More store closings, I believe 5,400 announced so far. 5,400 retail stores closing. This has been a difficult market, and we've warned for years that trying to play the retail stocks is very dangerous. Pier 1, Fort Worth-based Pier 1, a very good chain, moving from 25 down to a low of 50 cents. The retail ice age, yes, Amazon's a big part of that. Also taking out Plano-based JCPenney, $1.29 currently. The unsustainable models there, people have tried to trade this all along the way, and a retail-based strategy at this point doesn't appear to be wise as they go through what is clearly a depression for that industry. The real estate revolution, we're going to do an extended thing on that this next week. These are two stocks that are involved in changing the way that residential real estate transactions are done. Redfin, Zillow, there's a company called Door here in Dallas. We're going to go more in depth on how that's going to change the residential real estate market and some surprising forecasts for what that holds in the future on the price of your house. Thank you for tuning in to NetWorthRadio.com and the McGowan Group YouTube channel. Subscribe, because when there's fast breaking news and important portfolio strategy needs to be delivered, we will be right here. Thank you for joining us. I'm Spencer McGowan, President, McGowan Group. Get to NetWorthRadio.com. My firm, McGowan Group Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at networthradio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of networthradio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.